And maybe one of the great ironies of life and history is that the exact opposite extreme is crypto. So when you buy Bitcoin, you get the best asset, created in the history of the world. But then you had to stomach the very, very worst assets and the worst circumstances, because if I look at crypto, it's much, much worse than any commodity. You have to be committed to hold the Bitcoin until the crypto, excesses go away, right? Until the crypto industry gets adult supervision, and 98% of the bad actors get squeezed out, and the big exchanges all get regulated, and they become transparent. At that point, then this is a much easier decision. When we get to that point, then I think the industry grows up. It's 10x to 100x bigger. But right now, we're kind of crossing this intermediate transition period. Well, I've counted 3 boom and bust cycles so far. So even though I'm only involved in this space since August 10th of 2020, we did have a massive run past 60,000 and a crash when the Chinese, banned Bitcoin mining. And then we had another run back above 60,000, and then we had a crash. And then we had a, kind of a false rally where it was moving up into the 40s, toward the 50s, and then we got the crash to here. So I would say, even though I'm a newcomer to the space, I'm starting to get used to the volatility. When we got into Bitcoin, I knew that Bitcoin is on one hand a really good thing. I mean, Bitcoin represents the extreme in asset in asset responsibility, like the most well-engineered, most ethical, most economically sound asset. So we can think about Bitcoin as, well, if I wanted to invest in something and I didn't trust a company, and I don't trust a government, and I don't trust nature. And Bitcoin represents this ideal extreme, right? It's all the benefits of a commodity, but it's immortal, indestructible, and it's a scarcity. So I would rather have it than $1 billion of any kind of commodity. And it also represents the best of a security, because there is no CEO, there's no board of directors, there's no product to ship, there's no ability to dilute the shareholders, there's no nexus, there's no headquarters. All the things that cause people to lose money investing in securities. Bitcoin can't take on debt, therefore it cannot be rendered insolvent. So that's Bitcoin. On a barbell, it's like this extreme. And maybe one of the great ironies of life and history is that the exact opposite extreme is crypto. So when you buy Bitcoin, you get the best asset, created in the history of the world. But then you had to stomach the very, very worst assets and the worst circumstances, because if I look at crypto, it's much, much worse than any commodity, because it takes no energy to create it, right? You can create 20,000 cryptos. It's an infinite supply commodity, but it's also worse than every security, because with securities, there are securities laws. Like, there's no way that the CEO of a publicly traded company would do to the company what people in the crypto industry routinely do all the time. So crypto is kind of the worst of all worlds. It's an unregistered security, and it's an unbounded commodity. And so here we are, we're in this volatile world, and you say, well, so how do I feel about volatility? Well, the source of a lot of the volatility is all of the vice in the crypto world, which is just poorly engineered, unethical, not economically sound assets. And if you want the world's best engineered, most ethical, most economically sound asset, you have to agree to live in a world where it is cross-collateralized with the worst assets, and you have to have a thick enough skin that you're willing to actually wait until the marketplace sorts out the world's best asset from the world's worst assets, and the price you'll pay is going to be that volatility. I think that the regulators have been fairly slow in their enforcement of the regulations on the books everywhere in the world, and regulatory enforcement actions. Both they're very expensive and they take a long time, and they're not as effective as you'd like them to be. The assets themselves are trading on offshore unregulated exchanges, and the exchanges have been cutting corners, right? If we take the FTX example, if you can set up an exchange where you're the market maker, you're the issuer, you're the prime broker, and then you trade against your own customers, what you have is a bunch of crypto casinos where they have a vested interest in creating the assets, promoting the assets, manipulating the price of the assets. And the regulators, for whatever reason, have been very slow to shut them down. Right? Like, why did FTX even exist? Well, the U.S. regulators don't want to shut down, an illegitimate exchange offshore. And then when they see something they do want to shut down, it takes years and years and years to win the case in court. So I think it's been just really slow, expensive, ineffective execution of the existing laws. That's why the assets exist. I don't think they will continue to exist forever, just because FTX has made it so obvious in the past few months, right, the danger of allowing these things to continue to exist, that I think that the regulators and regulatory enforcement actions will get amped up by a substantial factor in the coming year. The volatility of Bitcoin, which has been driven in large part by the market manipulation of the crypto exchanges, especially the offshore crypto exchanges. I think that's the number two thing. The FTXs of the world trading with 20x or 40x leverage with counterfeit stolen money. I think that's created volatility. The reputational toxicity of having the asset class conjoined with the crypto casinos. So if you're a really large, legitimate company, if you bought $1 billion of Bitcoin and doubled your money, you would be showing that you lost $800 million. I mean, it's an obvious strike. And then you'd have to explain to your outside shareholders what Bitcoin was, and then you would also have to deal with all the negative publicity that comes from the blow-ups of a 3 Arrows or a Celsius or a BlockFi or a Terra, Luna or FTX. You have to be committed to hold the Bitcoin until the crypto, excesses go away, right? Until the crypto industry gets adult supervision, and 98% of the bad actors get squeezed out, and the big exchanges all get regulated, and they become transparent. At that point, then this is a much easier decision. But we're kind of in this transitional period where the industry is transitioning from the first decade, which is entrepreneurial and offshore, and anything goes, kind of Wild West, And then we're, the next generation, maybe we get through that chasm by 2024, and from 2024 to 2034, it's more like institutional mainstream adoption, where you have trustworthy, transparent institutions, publicly traded companies, regulated institutions, big institutional investors, big public corporations. When we get to that point, then I think the industry grows up. It's 10x to 100x bigger. But right now we're kind of crossing this intermediate transition period. Before 2020, I don't think any institutions would have gotten into the space at all. It was almost impossible to get into space. And then I think after 2024, they'll probably have worked out a lot of the accounting issues and the regulatory issues, and you'll see the Bank of Americas, the Goldman Sachs, or the JP Morgans. They will go ahead and buy and custody, your Bitcoin for you, and they'll be stable coins, who knows? I don't know whether we'll have other digital securities trading or not, because it's not clear whether or not the SEC is going to allow digital securities to trade and how. It's just unclear. But I think that right now we're kind of right in the middle of that transitional 4-year time period. I think you'll see a layer of approaches, but for the most part, holding your own private keys or in a multi-sig relationship is going to be much more common with individuals, families, family offices, and small to mid-sized private corporations. I think that with public corporations and large companies, or with governments or agencies and mutual funds and the like, when they do it, they will do it with a regulated trustee or a regulated custodian, like a Bank of New York Mellon or Fidelity or a big public organization, even potentially FDIC insured banks like JP Morgan or Goldman Sachs or the like. And the reason why is there's those organizations aren't even allowed to trust their own CEO. With those kind of organizations, you tend to actually have to you have to construct something with checks and balances. When you get to an institutional scale, you're going to have institutional grade custodians that are expected to outlast all the people. So this is a blessing and a curse, right? I mean, if you're a hardcore maximalist, you would say, well, we just liked it when it was just 100 million individuals and they had their own money in their head or their own money in their hardware wallet. Yeah, well, that's the blessing. The curse is if you actually want New York City and Chicago and San Francisco and the United States and 10,000 publicly traded institutions to all buy Bitcoin and embrace Bitcoin, then you're going to have to deal with the control structures of those companies. They're going to deal with, big banks, Goldman Sachs, JP Morgan, Morgan Stanley, Fidelity, the massive institutions. And I don't think it's a problem. I think that everybody will have the ability to take custody of their own Bitcoin. So if you bought Bitcoin through Fidelity and then you want to put it on your own hardware wallet between ages 40 and 75, you can do it. And if you get a terminal diagnosis of cancer and you feel like you'll be dead in the next 6 months, you're probably going to take it from your hardware wallet and you're going to put it with your escrow agent or your lawyer or your estate manager or someone, and you're going to leave instructions to your loved ones because that's the right thing to do.